Right, good morning everyone. Well, the dollar had a good week last week, particularly against the commodity currencies. Their poor performance, despite the improvement in the Chinese data, is due in part to the correlation between them and the emerging market currencies, particularly the Asian currencies, and partly because these countries have large current account deficits that will now have to be financed in competition with higher US yields. As for the New Zealand dollar, the worst performer, the restrictions on mortgage lending unveiled last week in New Zealand have removed some of the previously very aggressive assumptions about monetary tightening in that country. Plus, the disappointing trade figures out overnight didn't help either. I don't think the worst is over yet for these currencies. On the other hand, the dollar fell modestly against the stocky, the euro, and the Swissy. The strength of the euro, and particularly the strength of the Swiss franc, is probably the counterpart to the general weakness in emerging market currencies. As money flows out of the emerging markets looking for a safer home, the Swiss franc is a natural safe haven. While the dollar gained over the week as a whole, the picture was a lot different on Friday alone after new home sales collapsed. The new home sales figures are inconsistent with other data we have on the housing market and may signify just a lack of supply of new homes rather than any lack of demand for them. Nonetheless, the immediate reaction was to call into question whether the U.S. economy could withstand tapering off of the Fed's mortgage bond purchases. That sent U.S. bond yields lower, that sent Fed funds expectations lower, and of course it sent the dollar lower too. The euro was hardly changed against the yen or the Swiss franc, indicating that the day's moves really were just focused on the dollar. One exception might be sterling, which weakened a bit, perhaps in anticipation of Bank of England Governor Carney's speech on Wednesday, when he's likely to reinforce the case for forward guidance and try to calm market expectations of higher rates. So that may be a negative for the pound this week. The week gets off to a quiet start today. There are no major Eurozone indicators, and it's a bank holiday in the UK. U.S. durable goods orders for July are expected to be down 4% month on month, a big turnaround from up 4.2% in June, but that's due to an expected correction in aircraft orders, which more than doubled in May and June to a record high. Excluding transportation equipment, orders are expected to be up 0.5% month on month versus flat the previous month, which could help to support the dollar. On the other hand, the Dallas Fed index is forecast to be slightly lower at 3.9 in July versus 4.4 in the previous month. The Philly Fed and the Empire State surveys were both lower, so this wouldn't be a total surprise. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.